Most funded futures accounts are designed for speed, not patience. They work great for day traders, but swing traders need time for trades to play out. So if you trade futures and you want a funded account that lets you hold overnight and over the weekend, pay attention so you're not stuck in side rules made for day traders. Because once you understand three things, everything gets easier. First, why most prop firms force you to close your trades every day. Second, why swing traders get trapped by drawdown rules even when their trade idea is correct. Third, the clean solution I personally like for swing trading futures funded accounts. Let us start with the first problem. Why do most futures prop firms tell you to be flat around the daily close window? It is not because they are evil. It is because of margin. During the daily reset window, brokers check margin requirements. If the firm is offering you cheap intraday margin, they do not want the risk of you holding a big contract through that reset. That is why a lot of firms say no positions held between that window, and then you could trade again later. And this is where swing traders feel like they are being punished. Because swing trading is simple. You take a trade idea that might need time. You hold it. You let it breathe. If you're forced to close every day, you are not swing trading anymore. You're doing a weird fake swing where you constantly cut and re-enter. That creates two new problems. Problem one is you can miss the move in the window when you are forced to be out. Problem two is you pay extra costs and you create extra chances to mess up the trade. So the first filter for a real swing-friendly funded account is obvious. They must allow overnight holding. And if you're serious about swing trading, they should also allow weekend holding. Now here comes the second problem. Even when a firm says swing is allowed, the drawdown rules can still crush you. Let me explain this with stupid simple math. Imagine you have a 100K account. Now imagine the max loss is 5K. So the lowest your account can ever go is 95K. That sounds simple, but the danger is how that 95K line is calculated. Some firms use a trailing drawdown that follows your account as you make profit. That means if you make money, the line moves up behind you. So you get closer to failure, even while you're doing well. And swing traders hate this for one reason. Swing trades move in waves. A normal swing trade might go up, then pull back, then go up again. If the drawdown line is chasing your best balance, a normal pullback can kill you even if the trade later goes to target. Now, let us make it concrete. You start at 100K. You make 2K profit. Your account shows 102K. If the drawdown trails, and now your minimum is 97K or 99K, depending on the rules, a pullback that would normally be fine can suddenly become a failure. This is why swing traders should care about the words static drawdown and end of day trailing. Static is simple. The line does not chase you. It stays at a fixed level like 95K in our example. End of day trailing is a little different. It can trail, but it only updates at the end of the day, not every second during the day. That can make life less stressful than an intraday trailing rule. Still, static is the cleanest for swing-style thinking. Now let us talk about the third problem. Rules. Most traders do not get wiped out by one giant mistake. They get wiped out by small rules they forget. News rules, weekend rules, hidden restrictions, different rules on different accounts. And the worst part is when you try to manage multiple funded accounts and every account has a slightly different rule. That is when your brain gets cooked. You think you're trading, but you're actually babysitting rules. So the swing trader game is really this. Find a program where the rules match your style so you can focus on trading, not on survival. And this is where elite trader funding comes in, because they have two paths that are built for holding trades. Direct to funded, also called DTF, and diamond hands. Here is the simple difference. DTF is for people who want to skip the evaluation and start right away in an elite sim funded account. Diamond Hands includes an evaluation first. Then you move to the funded stage when you pass. And here is the part you actually care about. Both are designed to allow holding trades overnight and on weekends, which is the whole point of swing trading. If you want to look into elite trader funding, check the link in the pinned comment for up to 70% off. It supports the channel. Now let me explain the DTF idea in plain English. DTF means you pay a one-time fee and you start trading the funded style account immediately, without doing a separate evaluation step first. That is powerful for a swing trader because swing trading is slow. A lot of evaluation models are built to pressure you into trading fast. Fast usually means lower time frames. Lower time frames usually means more mistakes. And more mistakes means more blown accounts. That is why swing traders often feel like the prop firm model is not designed for them. With DTF, you can avoid that pressure. Now, DTF has two drawdown styles depending on the account size. Some accounts use end-of-day trailing drawdown. Some accounts use static drawdown. This matters because you should choose the drawdown style that matches how you trade. If you hate the idea of the line chasing you, you will naturally prefer static. If you are okay with an end-of-day trail that eventually locks, you can consider that too. And elite trader funding uses a safety net concept. Once you reach a certain amount of realized profit, the drawdown stops moving and becomes fixed at your starting balance plus $100. Here is a simple example from the idea. Start with 100K. Max loss is 5K. Safety net is max loss plus $100, so $5,100. Once you have $5,100 realized profit, the drawdown locks and you have a clear floor. That is the dream for a swing trader. Because once it locks, you can focus on your process without the line creeping up every time you have a good week. Now, Diamond Hands. Diamond Hands is the other path. You do an evaluation and you must trade at least 5 days and hit the profit target while respecting their end-of-day trailing drawdown rules during the evaluation. After you pass, you get the elite sim funded account. And the safety net concept still exists there too, where the drawdown trails until you reach the safety net, then it locks. So why would someone pick Diamond Hands instead of DTF? Here is the simple way to think about it. DTF is the straight line. Pay once, start immediately, no evaluation. Diamond Hands is the classic path. Prove an evaluation, then get funded. Both can fit swing traders because both allow holding overnight and over the weekend, which is rare in this space. Now, let us talk about the part most people ignore. Position sizing. Swing trading a futures funded account is not just about holding overnight. It is about holding overnight with controlled risk. If you take a swing trade with 2 minis and you have a normal overnight pullback, you can hit daily loss limits or max loss limits faster than you think. So here's the rule for swing traders. Your trade idea must survive noise, but your size must survive gaps. Overnight and weekends can gap. That is not fear. That is reality. So instead of thinking, how can I hold this trade for 3 days? Ask yourself this. If the market opens against me, does my account survive? That is it. That is the swing trader mindset. Now, let us build curiosity. Most people think the hard part is finding an account that allows swing trading. No, the hard part is finding an account where the rules do not force you to trade like a clown. Because swing trading needs space. If the rules force you to manage tiny restrictions all day, you will eventually break one. And even experienced traders break rules when they are juggling too many different rule sets across multiple firms. That is why I like simple. One firm, one rule set, one style. Now, quick reminder. If you want to check out Elite Trader Funding, the link in the pinned comment can give you up to 70% off, and it also supports my work. If you want more videos like this that go straight to the point, like and subscribe right now. Back to the value. Here are the 3 big mistakes swing traders make with funded accounts. Mistake 1 is treating a swing account like a day trading account. They enter too big because they want it to move today. That is not swing trading. Swing trading is letting time do the work. Mistake 2 is not respecting drawdown mechanics. They see profit and they think they are safe. But if the drawdown trails, your safety line may be closer than you think. Mistake 3 is forgetting that rules are part of the game. If you cannot explain the rules in 1 minute, you will eventually violate something by accident. So the best setup is boring. Swing allowed. Clear drawdown. Clear path to payouts. A structure where you can trade your plan without playing rule roulette. And that is why the combination of DTF and diamond hands is interesting. Because both are built around allowing holding trades overnight and on weekends. And both include the idea of reaching a safety net that turns the drawdown into something fixed. Now, I'm not telling you to go all in. I'm telling you to think like a professional. Pick one path. Commit to one rule set. Trade small enough to stay alive. Because in this game, staying alive is winning. And once you're alive long enough, your edge starts paying you. One last thing. People love to say day trading is the only way. That is not true. Swing trading can be cleaner because you are not forced to predict what happens in the next 2 hours. You are simply trying to catch a move over time. And for a lot of traders, that is mentally easier. More time, less panic, more room for the trade to work. So if day trading has been cooking your brain, swing trading a futures funded account might be the reset you need. Just make sure the account actually supports your style. If you want to look into elite trader funding, check the link in the pinned comment for up to 70% off. It supports the channel. And if you want more straight to the point trading content, like and subscribe so you do not miss the next one. I will see you in the next video.